So let's talk about the investment landscape for 2026. It really is a puzzle. On one hand, it's incredibly complex, with risks seemingly around every corner. But hidden inside all that complexity, well, that's where you find some really powerful catalysts for growth. Today, we're going to unpack the Goldman Sachs 2026 investment outlook and see if we can uncover those exact opportunities.
So what is the big challenge we're all facing as we look towards 2026? It's really about navigating this tangled web of interconnected forces. Everything from what central banks are doing to shifting global politics. The goal here isn't to try and dodge all the volatility. That's probably impossible. Instead, it's to understand it and then make some smart moves to find those returns. So, where do we even begin?
All right, first things first. Let's get the lay of the land. We've got to map out the major forces that are shaping this really challenging but also incredibly dynamic investment environment.
Okay, so it really boils down to four big pillars of complexity for 2026. You've got central banks that are all on different pages. You have a new global trade order that's all about tariffs. Then there's the mounting fiscal risks from all this government debt. And of course, you can't forget the ongoing geopolitical tensions. Now, any one of these would be a huge deal on its own. But when you put them all together, it creates a seriously intricate puzzle for investors.
So let's get specific, right? It's one thing to talk about complexity as this big, abstract idea. It's a whole other thing to look at the hard numbers that are actually defining these headwinds we're all up against. Let's start with a number for you. 18%. Now, what do you think that could be? I'll tell you this much. It has a direct impact on global trade and, frankly, on what we all pay for stuff. That's it. 18% is the U.S. effective tariff rate. And the history here is what's really important. It is the highest it's been since 1934. Think about that for a second. Now, a lot of companies have done a pretty good job of protecting their profits so far, but make no mistake, this is a major risk for global growth as we head into 2026. Okay, next up is a number that is, well, it's so big it's kind of hard to wrap your head around, over $100 trillion. And this one points to a massive systemic risk for the entire global economy. Yep, that's the total amount of government debt around the world. The concern here isn't just the jaw-dropping size of the number itself, but the context behind it. You have countries facing these immense spending pressures for defense, for the green energy transition, for aging populations, and it's all happening while higher interest rates are making all that debt way more expensive to pay off. Now, for a much, much smaller number, but one that tells a huge story about today's market, just 9. What in the world could this represent? This little number just perfectly illustrates the market's concentration right now. Only 9 companies, most of them fueled by all the AI hype, have a market cap over $1 trillion each. In fact, the top 10 stocks make up about 40% of the S&P 500's entire value. The biggest risk here isn't necessarily some big bubble popping, it's actually something much simpler. What if their earnings just don't live up to the sky-high expectations? For investors, it just screams that diversification, not putting all your eggs in one basket, is more critical than ever. So that brings us to the most important point. We've laid out all the headwinds. We've got high tariffs, massive debt, super concentrated markets. It definitely paints a pretty daunting picture. So the question is, where on earth do we find the catalyst that can actually drive real growth in an environment like this? Okay, so let's shift gears. Enough about the problems, let's start talking about the solutions. It's time to go looking for those powerful, sometimes hidden trends that could drive growth and unlock some serious value for investors who know where to look. And just so we're all on the same page, when we say catalyst, what do we really mean? This isn't just any old trend. We're talking about a specific driver, maybe an event or a theme that has the real potential to supercharge growth and unlock new value. So this outlook zeroes in on 3 main catalysts for 2026. First, there's the surprisingly durable boom in AI capital spending. Second, a big revival in global deal-making and M&A. And third, this massive wave of investment that's being driven by the need for economic security and the whole energy transition. Let's break each one of these down. First up,
AI. And you know what? This quote really says it all. For 2 straight years, analysts have consistently underestimated just how much the tech giants would be willing to spend on AI infrastructure. The report suggests this spending spree is going to keep going right into 2026, which means there could still be a lot more upside in AI-related investments than the market is even expecting right now. The second catalyst is a big comeback in deal-making. After a bit of a slow period, M&A activity is roaring back to life. The outlook is projecting a 15% jump in completed U.S. deals for 2026, and Europe is seeing a similar rebound. And think about it, if interest rates start to come down, that could pour jet fuel on the fire. This isn't just about the big banks either. It means big opportunities for smaller companies that could get bought out, and it's a rising tide for the whole world of financing.
And that brings us to our third catalyst, which can be captured by a single, honestly staggering number, over 175%.
That is the forecasted growth in power demand just from data centers by 2030. And a huge part of that is driven by AI. Now, this isn't just some small increase. It's a generational demand shock that's going to require massive investment in basically everything, from low-carbon power plants and grid upgrades to the people needed to actually build it all.
Okay, so we've laid out the headwinds and we've laid out the catalysts. Now, let's ground these big ideas and see how they can help answer some of the key questions that pretty much every investor is asking right now.
First question, and it's a big one. Where do you invest when everything seems so expensive? And yeah, this chart pretty much confirms it. Valuations are high across the board. But the answer isn't to just sit on the sidelines. It's about being more selective, about finding those pockets of value, maybe in smaller companies where valuations are a bit more reasonable, or in certain corners of the bond market.
Second question, how in the world do you navigate central bank policies in 2026? Well, this slide shows the divergence pretty clearly. The US is expected to be cutting rates, while Japan is probably going to be hiking them. Now, these different paths, they actually create opportunities for investors to diversify and make strategic bets on interest rates in different countries, playing different parts of the yield curve, the difference between short-term and long-term rates.
And third, how is consumer spending going to hold up against those high tariffs? This chart shows what's really a tale of two economies. While lower-income households are definitely feeling the squeeze, they actually account for less than 10% of spending. The wealthiest 20%, they account for 40%. The report suggests that strong balance sheets and high savings rates, especially among this top group, should provide a really significant buffer against any sharp slowdown in spending.
So here's the bottom line. Is 2026 going to be complex? Absolutely. You've got risks from debt, trade, and politics. But, and this is the important part, within all that complexity are these incredibly powerful catalysts in AI, in deal-making, and in the energy transition. So the final question really is for you. In this complex world, where are you going to seek your catalysts for growth?